In this video, guys, I'm going to show you my 3-step framework in order to buy from support and sell from resistance with high probability. So you guys don't have to try and guess when the market is ready to make its next move. If you guys are new to the channel, welcome. My name is Hussam Sami, the founder of SFX-GLOBAL, where we help people escape the 9-to-5 rat race by learning how to trade, generating a primary or secondary stream of income in just a few hours a week. Now guys, make sure you watch till the very end because I'll walk you through my 3-step framework and then we'll do numerous examples where you guys can consolidate your knowledge. So without further ado, let's get stuck into it. Now, support and resistance are fundamental concepts in technical analysis. However, 99% of traders are fucking it up and they're trading it incorrectly. A common mistake I see is that too many traders are marking out their support and resistance zones to begin with incorrectly. They're focusing on the price action from 10 years ago, and that does not matter. We are most interested in the recent price action, the most recent levels the price has reacted to or formed. And we're not interested about, levels going back 3 years ago, 5 years ago, even 12 months ago can be too long. Once they mark out these zones, they are then blindly trading from these areas with pending orders. And they're trying to guess their stop loss placement. And as a result, these trade setups have low risk to reward, their timing is incorrect, and they're trying to premeditate the market's next move instead of waiting for the market to tell you whether it's ready for its next move from, a level that it's at or not. And that's because they're not using price action. They think drawing a few lines, support and resistance is all that's required in order to take high probability setups, and they completely forget about price action. When you couple price action with support and resistance, you are already taking more high probability setups than if you were to blindly buy from support or blindly sell from resistance. Now, to make matters worse, guys, more often than not, the market will end up heading in their direction, causing them pain and frustration. And it was simply a matter of timing. So using my 3-step framework, I'm going to show you guys how to drastically improve your timing, how to know when the market is ready to react from a zone, and how to find your entries so you can trade to, the next level of support or the next level of resistance. Now, let's go to the charts and take an in-depth look at support and resistance. So firstly, guys, let's take a look at what support is and what resistance is. Let's do a little recap here. So support is simply when the market has found a floor and the price is struggling to break down below this level, and this will often look on the chart by when this will often be shown on the chart in the form of the market making a number of low points or swing lows like this, and you can see the market will form a level of support right here. So it has a reaction and then it pushes away, and it has a reaction and it pushes away. It has a reaction, and this level right here acts as a floor. It supports the price from falling any further below. Similarly, a level of resistance, guys, is where the market forms, a series of high points and it fails to push higher. And what does this often look like in a chart? A level of resistance is when the market forms a series of high points and it fails to push higher. And this simply on the chart will look like this. The market will form a high point and then it will push down. Another high point, it will push down. And therefore you guys can see this level right here is resisting the price from pushing higher. And it acts as a ceiling. Nice and simple. These are not complex. Now, how normal traders will trade these levels of support and resistance is like this. So the price will form a level of resistance, something like this, and they will say, okay, previously in the past the price has reacted once, twice, 3 times to this level. What we are going to do is we're going to mark this level as a level of resistance. For the purpose of the example, let's call this the level of resistance. And then what they will do is they'll set a pending order at the start of the zone. They will set a stop loss a few pips above the high of the zone, and they will target the next or the previous level of support. And what often will occur is the market will come to this level. They are premeditating when the market is ready to make its next move. It might push a bit higher than the zone. It will take them out and then the market will drop. And this is what I call a classic fake out or a stop loss hunt. And, like I mentioned to you guys earlier, the trade might go in their direction, but it's just left them behind. And this, will cause them plenty of frustration, and they think the market is against them, or they look for the next holy grail strategy or something. And it's simply a matter of timing. They are trying to premeditate the market instead of reacting to what the market tells them. Similarly, same thing with the level of buying from support. They'll see, okay, the market has formed a level of support as such. So, we must have an area of support, something like this. And what they will do is they'll grab a long tool. They will set a pending order at the start of the zone, a stop loss just below. And, they will mark the previous support. And what will happen now is, the market, sometimes it will react. More often than not, it will take them out before continuing on in their direction, leaving them pulling their hair out. So I don't want you guys to go through this because, it's frustrating. It makes the learning process really arduous. And there's a simple way to fix this. And this is using my 3-step framework. So now let's take a look at the chart and go through my 3-step framework. So guys, here we are on AUD/USD. And I'm going to walk you guys through my 3-step framework. So number one, you're going to mark your support and resistance levels based on the most recent price action. Too often, people are looking all the way back to 1983 or way too far left on their chart, and they're marking levels that might not be of significance to us. So right now, we can see here on the 4-hour that, we have plenty of levels here that we can use. We don't have to mark this support level here, for example, all the way up here because the price is all the way down here. So we have other levels closer to the price, like this level of resistance, or this level of support, or even closer to the price we have. Let's get rid of this one because it's too far away for my liking. We have this level, this most recent level of support, because you can see the market reacted to this level and it pushed up. We also have this level of resistance right here where the market pushed down from here, and we simply want to mark the most recent resistance level. So I would mark this levels as such, and what I would look for is, okay, maybe buying from here if the market pushes back here, targeting up here. Or if the market pushes up here, I would look to take a sell here and target the next level of support down here. And as you guys know, when support is broken, it acts as resistance, or when resistance is broken, it acts as support. So if we break now this level of resistance, we wait for a retest as support to mark the next level, so on and so forth. And people are marking too many zones. They're getting too confused about what's going on, and they're trying to premeditate the market. So as I mentioned, I see a level of resistance right here. I also see a level of support right here. And I would mark these levels out as such. And that's number one, marking out your support and resistance zones on the daily time frame or the 4-hour time frame. Here we are on the 4-hour time frame. Then I want to wait for candlestick rejections or engulfing candles in the zone. So I want to wait for the price to push up to the zone, and then I want to see candles with large upper wicks, stuff like this, large wicks pushing the, showing me rejections to the zones. Or I want to look for bullish or bearish engulfing candles. And then number three, after we have seen these rejection candles, we go to the shorter time frame to look for our entries. So let's play this through and see what happens. As you guys can see here, we are approaching the zone. I'm still not seeing anything. And then boom, we can see here we have a bearish engulfing candle. Quite a strong one. Confirmed by the volumes too. You can see the volume spike here based on the last 2-3 candles. So this for me is a strong sign that sellers are entering back into the market. Now, once I see this, I will go to the 5-minute time frame if I'm using the 4-hour, and I will look for an entry. So on the 5-minute time frame now, I will simply use price action and market structure to look for an entry. And breaking this down, you guys can see we had these high and low points like this. We had a new lower low, the commencement of the downtrend, a lower high, a new lower low. What I want to see is a lower high retesting this previous 5-minute support as resistance to take a sell position, targeting, the daily lows. So let's see what happens here. I want to see the price pushing back somewhere in here. As you guys can see here, we form a lower low. This low is lower than this low. We have this 5-minute support that was broken that we now see is acting as resistance by these candlestick rejections. And so for me, this is a strong enough reason now to finally take a sell. My stop loss above, the previous high, something like this, and my target down to our 4-hour support, something like this. And immediately you guys can see we have a 5.9 risk to reward. So you risk 1%, you could make 6%, you risk 2%, you can make 12%, so on and so forth. And the biggest key here, guys, is by using my 3-step framework, we are taking a trade that is almost perfectly timed. And I'm now willing to personally risk capital on a setup like this because I am following what the market is telling me. The market is showing me rejections to the zone through our candlestick, rejection or engulfings to the zone. Then we come to the shorter time frame to find an entry with better risk to reward, dictated to us by price action. We have a reversal of the uptrend from higher highs and higher lows to lower lows and lower highs, telling us now the market is ready on the 5-minute time frame to commence its downtrend. And this is when I want to take my trade. And now finally I'd like to pay myself at an intermediate level, so I will pick something on the 15-minute time frame. We could go something like this level of support. So this tells me the market pushes back down. Here we have a strong, chance that we react from here and push back up. As always, you must manage your trade, guys. You cannot just set orders and hope for the best. With full targets, you must pay yourself at certain areas. So I look to pay myself here, and let's see what happens. What does the market do? You can see we start pushing down. We're at our break-even zone. So, you can choose to move your stop loss to break even or pay yourself. So at this level, I will close half my position, pay myself here, and I want to see the rest. And here you can see we get taken out at break even. That's all right. You must manage your trade. You never know what happens, and the market, continues its way back down. And that's okay. It continues without us pretty much to full target. As you guys can see, using, my 3-step framework, we are taking well-timed positions at these levels. So, now if that trade for us would be a break even, we can still go back to the 4-hour and continue to trade from these zones. So, we have now this level of resistance, the same level we had marked before, something like this. And you can see we have this level of support, which we were targeting on that sell that, we closed partial profits on and turned out to be break-even trade for us. Now, from this level of support, I want to see buying pressure entering the market. And I want to see, candlestick rejection or engulfing candles showing me that buyers are stepping in at this level of support. I don't want to blindly set my order here, because what most people would do is they would blindly set their order, something like this, stop loss, something like this, a target up here, and you have a less than 2-to-1 risk to reward. Previously, we had almost 6 in the reward. Here you would probably have again, a 2-to-1 or something like this, targeting this, and maybe a bit of a wider stop loss. Here you have a 3-to-1. So we had almost double the risk to reward using my 3-step framework. And this way you are also entering the market when it's primed to make its move. So now I want to see buying or rejection candles in the zone. There's nothing yet. We're in the zone. And here you guys can see we have an engulfing candle here on the 4-hour. And yes, we have, a wick on the upside, but for me, I would go to the 4-hour, and I want to take a look at what's going on with the market structure. And immediately in here, I see, okay, lower lows and lower highs forming through here as such. And then, this shifts to sideways price action. And now we have a higher high, a higher low. We have a new higher high here, and potentially a higher low. And here we can see, we break the previous market structure right here. So we break this high with a new higher high, and I want to see some buying pressure here on the candlesticks. So candles with, large underwicks or bullish engulfing candles to take a long position. You can see here now we have, a bullish candle, a rejection here. I will take my trade right here. I will set my stop loss below the previous low, something like this. And I will set my target all the way back up here at our previous level of resistance, where we anticipate the market will go to. And you know, here you can see, guys, we have 11-to-1 risk to reward, which is totally huge. You trade 10 setups with 5-to-1 or more risk to reward, and you have even less than 50% win rate, you will be immensely profitable, guys. And this is, you know, the key. And now, you know, I will look to pay myself, you know, at this level right here. And let's play this through and see what we get. So you can see we now reacted to the zone. And let's go to the 15-minute time frame and see, to speed this up a little bit. And you guys can see even on the 15-minute we are forming higher highs and higher lows. So here's a higher high, a higher low, a new higher high, a higher low, so on and so forth. And now we form a bit of a range, a new higher high, a higher low. So now you will close part of your trade here. And we keep writing this up until the price action has shifted. And I will bring my trade to break even. Risk free here after closing some profits. And you know, we just want to see the price action making higher highs and higher lows all the way up. Now you guys can see we're forming a range right here, and what we want to see is something like this to our target, or something like this to get out of our trade. And it's all managed through price action. And as you can see, we react to the lows of the range, we form a new high, coming in for the higher low. And you know, honestly, I would just close my trade out here. And there you have it, 130 pip trade from trading from, you know, previous support to resistance with 11-to-1 risk to reward. Nice and simple, guys. I want you guys to notice the timing, the risk to reward, and you know, how you incorporate price action to take really high probability setups. So there you guys have it, my 3-step framework to buy from support, sell from resistance, taking high probability setups with high risk to reward, and trading when the market is telling you it's ready to make its next move. No premeditation, no guesswork. So if you guys are interested and you found some value in this video and you want to find out a bit more about what I do, you'll find a link in the description. Also, please, you know, like, share, subscribe to the channel, and I'll see you guys in the next one.